From DLA Piper, this is the Beyond the Curve podcast. In this episode, DLA Piper's Austin Brown, Isabelle Ord, Floris de Wit, and Danny Tobey discuss the rapidly expanding role of AI in the financial services sector, including the fast-developing regulatory, reputational, and litigation challenges during this AI boom.
Hi, everyone, and welcome to our podcast on artificial intelligence and consumer compliance in financial services. I'm Austin Brown, a partner in DLA Piper's Washington, D.C. office, and my practice focuses on consumer protection, compliance advice, litigation, and enforcement relating to financial services providers.
Hi, everybody. I'm Isabelle Ord. I co-chair our U.S. Class Actions Group practice in our financial services sector, where we're seeing a lot of activity in the AI space and a great deal of interest, both about litigation and regulatory risk.
Hey, everybody. I'm Danny Tobey. I am chair of our AI and data analytics practice at DLA Piper. We're a group of lawyers and data scientists who work inside the firm on both the regulation and testing of AI, and we get to work with our friends and subject matter experts in financial services and other areas as AI keeps moving across sectors.
Hi all, and I'm Floris de Wit. I'm a technology lawyer. I focus on technology-related transactions like IT outsourcing. I've been a lawyer for more than 12 years, most of my time in Amsterdam, but also considerable time in Silicon Valley. I often help financial services clients, and these days a larger chunk of the work revolves around AI, so I'm happy to join.
Great. Thanks, Floris. As all of you listening know, AI is transforming and some might say taking over the world, but some might say that not enough attention has been paid to how AI is being used in the financial services space, particularly with respect to interactions with consumers. But AI impacts everything from credit decisions to simple customer service and really everything in between. I think we'll all agree that financial services regulators are just getting started and figuring out how to regulate the use of AI in financial services. Although, as Floris will talk about, the EU has arguably made more progress on this front than in the US. Isabelle, I was wondering if you could talk about the legal and ethical considerations that financial institutions should prioritize when implementing AI-driven decision-making processes, and how they could ensure that these systems comply with existing consumer protection laws.
This conversation comes at a fascinating time because there's so much in flux in the regulatory space, and the guidelines, particularly in the United States, are just being drawn in terms of really important issues like how do you make sure that the AI that you're using is consistent with the obligations to consumers? Where is the data coming from? Do you understand how the process is happening and what is being used to make decisioning? Are you then able to accurately report back to consumers how a decision was made? And in terms of where we're going on the next steps, the White House has recently issued a presidential executive order on AI that has some interesting guideposts for us to pay attention to, as well as other regulators coming into the space. But I think very much as it was in the early days of fintech, everyone is still grappling a little bit with what AI means and how you can use it responsibly. Nobody wants to use it unethically or irresponsibly, but perhaps they don't yet feel ready to fully articulate how that should be done. And I know we have Danny and Floris to talk with us a little bit about some of the things that people are doing in this space, but particularly in financial services because of the regulatory overlay and the reputational risk if you get it wrong. This is a huge area.
Danny, I was wondering if you could talk about your view of some of those legal and ethical considerations in financial services.
Sure. So it's a great question because we're seeing AI move across industries, and that's doing a couple things. One is we're seeing those industries and regulators coming out with their own rules about how AI should be governed in that sector. But then we're also seeing what we're calling the horizontal or omnibus AI rules coming out. So I know Floris is going to talk about the EU AI Act, and we're obviously watching that because it's driving a lot of what's going on in the US as well at the state level, especially. Colorado and Utah have come out with regulations now, and many states are following suit. So I think when you talk about financial services, one reason I think that's such a hot area is the direct interface with consumers. So whether you're looking at generic AI regulation or financial services specific regulation, anytime AI impacts a consumer directly, that's where you're going to have the highest risk categories. So we're seeing chatbots coming out. Austin, you and I've worked on some of these where the chatbots are being trained to give financial services guidance to consumers. We're seeing it in real estate and insurance and banking. So there's just so many ways that this technology can be deployed in the financial services industry that is very directly touching consumers and then in the background indirectly affecting what they get access to. So it's a very ripe area for risk and regulation.
That's great. I'd like to put a finer point on some of those laws in the U.S. that touch upon AI in a moment, but let me turn it over to Floris, if I could, for a second, just to provide his initial thoughts.
Yeah, I think in general, the risks associated with the use of AI, the legal risks and the ethical questions are not so different between the US and the EU. One of the examples around explainability was given that equally applies in Europe. But what is very different is the new EU AI Act that came into force on the 2nd of August. And it's a cross-sectoral piece of legislation that applies throughout Europe immediately. And I think it's worth noting a few things around that AI Act because it impacts financial services providers as well. The AI Act also introduces a category of high-risk AI systems. And that means that those systems are permitted provided you comply with stringent safeguards, such as a risk management system and responsibilities around the use of data. Non-compliance with that law can lead to very high penalties of up to 7% of a company's total global turnover. It's definitely worth noting that if you do business in the EU, that this piece of legislation is there now.
In the US, I'll just point out that as it relates to financial services providers, and in particular, the impact on consumers, there's nothing really specific that Congress or regulators have put out, except that the Consumer Financial Protection Bureau here in the U.S. has spoken about the impact of AI on consumers and the potential for legal violations. And I'll just at a high level say that the two primary legal regimes that apply are the Equal Credit Opportunity Act and the Fair Housing Act. The Equal Credit Opportunity Act covers pretty much every form of credit, and the Fair Housing Act covers, as it implies, housing. And then there's the prohibition on unfair, deceptive, or abusive acts or practices. And particularly in the financial services space, ECOA is relevant because it prohibits discrimination on the basis of a number of prohibited bases, race, ethnicity, et cetera. And as lenders are using AI or machine learning to make decisions, so for example, credit decisions or servicing decisions, even questions about when and how to reach out to consumers, for example, anticipating that they may default in the future based on their payment activity thus far, depending on whether those decisions disparately impact one race or ethnicity versus another, those could implicate those laws and are very important. And in fact, the CFPB issued a final rule recently regarding the use of AI and machine learning in home appraisal. So, for example, estimating the value of a home as you're approaching the sale of a home and purchase of a home, and requiring testing to ensure that there's no unlawful activity associated with the use of AI and machine learning in appraisals. And I'll talk about unfair, deceptive, or abusive acts or practices in a moment as well. So I guess the next question is, how is AI being used with respect to financial services and particularly the consumer experience? We talked about chat bots, but I wonder if there's any other thoughts that people have about how it's being used, how it might be used in the future, and considerations associated with that.
Yeah, so it's being used in a number of ways, and chatbots are interesting, and nobody wants to call them chatbots because they want them to be much more sophisticated and exciting than that. But generative AI, one of the easiest immediate deployments are these consumer-facing agents, and a lot of companies are doing things like training those chatbots, and I use training loosely, but grounding them in company policies, company FAQs, even going so far as to train them on company analysis and forward-looking predictive surveys, and then allowing users to interact and ask questions. And one of the things we're really wrestling with is certainly discrimination, which you mentioned, but accuracy is another huge issue. And I'm actually really pleased to see that, because for a long time, the regulators, for years and years, were focused on solely discrimination, which is a huge problem with AI and certainly deserves the attention it's got. But recently, you're seeing also deserving attention on just how well do these things do, and how do we benchmark them and make sure they are accurate enough and compared to what. And I thought it was great, Austin, that you brought up the CFPB recent publication on the housing appraisals, because they really did make an effort to say this is about discrimination, but it's also about accuracy and making sure that the tools you're putting out there are accurate. And I think that's something people should be really aware of, because when we're testing AI now, it's not just about, is it discriminatory, is it unlawfully biased, but also where's it getting its information from, how true is it being to those information sources, and I think most importantly, because Gen AI is so probabilistic, how is it performing over time? If you ask it 5 times, if you ask it 100 times, are you seeing a consistency in addition to quality? And that's a new thing with Gen AI that people are having to adapt to.
And responsiveness too, right? Is it actually helpful to the people that are trying to interact with it? Or as the CFPB has flagged, is it barring you from getting to customer service because it can't answer your questions and there's nobody to pick up the call?
Floris, I wonder if you have any additional thoughts on that from an EU perspective.
Yeah, I think similar considerations apply also in the EU. I do think if we look at use cases, that there's potentially a bit less use of AI in the EU than in the US. That may have to do with lack of scale within Europe and lack of availability of data, or potentially stricter regulatory regimes that apply in the EU. Still, AI is being used as chatbots, fraud prevention, ID verification, but also in creditworthiness checks. And for example, the AI Act that I just mentioned points out that creditworthiness checks done with AI for consumers is one of those high-risk AI systems that you can only use if you meet those stringent safeguards.
Yeah, I'll piggyback on that. It's really the same in the US too. When you look at these horizontal laws that are intended to govern AI as opposed to governing a particular sector or use case, they also almost to a T loop in financial and lending services. The Colorado law is a great example. It regulates consequential decisions using AI, and they define that as basically a decision that has a material, legal, or similar effect, and it's tied to providing or denying consumers access to things like education, employment, health, and then, of course, they call out financial and lending services, as well as housing and insurance and other things. Whether you're looking at a CFPB guidance or a horizontal industry agnostic AI law, I think you're pretty much always going to be looking at financial services as a higher risk category that has extra requirements on it.
I was wondering if anyone is willing to share their views of how well the regulators are dealing with AI, the use of AI, particularly in financial services, and what we expect on the horizon. We talked about the EU Act, but maybe Danny or Isabelle, in the US, what do we think? Do we think more can or should be done, or are we seeing the right level of regulation, or maybe more importantly, the right level of guidance to financial services entities from the regulators?
I think it's very early days, and that's because the regulators are trying to strike a balance between not stifling innovation, but also making sure that this is implemented in a responsible and ethical manner. But what does that actually mean? I think there's a lot of discussion still about what needs to be done to make sure that we understand the risks that come along with the benefits. And particularly in the financial services space, there are risks that could have significant effect both on consumers and ultimately upon the financial system if you end up using AI in a way that it is not intended to be used and it somehow creates a scenario. And this has been flagged by various regulators, including Michael Hsu, the acting comptroller of the currency, who talked about how it's not inconceivable that you could have a run on a bank or some kind of herding mentality in the financial system that AI causes to create real systemic problems and losses. Do we actually understand what this technology does? And have we fully vetted both the pros and the cons of the technology? I said earlier, it feels a little bit like the early days of fintech, and I think that's a good parallel. There needed to be a lot of sandboxing. There needed to be a lot of interaction with the industry to understand where responsible innovation is happening and also what needs to be done in terms of protecting banks from fraud. You talked about the voice identification and the other ways that AI can be used to potentially create cybersecurity risks and other issues. So my view is there's a lot more to be done there. Good conversations are being had, and certainly there is a lot of legislation bubbling up from the states. California has introduced more than 30 measures recently about AI, but it is still very much in flux in the United States. And I wonder if Floris has a different view coming from the EU.
Yes and no, because we have this generic piece of legislation, and I think Danny also touched upon this, but there's also sector-specific legislation that sometimes touches upon the same topics. And there can be overlap, there can be some inconsistencies. And if I look at what the regulator is now doing, they recognize this, that there is this potential. They also seek interaction with the sector. The Dutch regulator indicated that they want to organize roundtable sessions or symposia to stay in that dialogue. For financial institutions, it's sometimes difficult to work with these open norms that these legislations introduce and then see what does that mean in these particular cases. So I think that's an area where financial institutions are struggling and where regulators recognize that and also try to address that.
Yeah, I agree. I won't say we're suffering from too few regulatory efforts. If anything, I think people are getting a little exhausted trying to keep up with all the new regulations and proposed laws. Isabelle mentioned California, and in the US, more broadly, there's over 600 state-level proposals for AI laws, so it's a bit dizzying. But at the same time, I do think we are suffering from a lack of guidance on the specifics within those frameworks. So you have some domains and regulators saying we're not going to be prescriptive on what it means to test your AI for accuracy or for unlawful discrimination. We're just going to say you have to do it. And we're going to leave it up to companies to say what that particular test or methodology is. Then you have others, a recent insurance bulletin, I think from New York, that was much more prescriptive and said we want quantitative and qualitative testing and a list of different statistical methodologies. So it is going to be messy, to Isabelle's point, until it gets clearer on who's expecting what tests are good enough. Do you have to hire an external tester? Can it be internal? I think those next level questions, we are going to be needing some guidance. And until then, it's a rule of reasonability.
Yeah, it's a great point. Just a specific example from my practice. The Equal Credit Opportunity Act and the Fair Credit Reporting Act require disclosure of adverse action reasons when you decline an application for credit. And the regulation requires that the reasons be specific to the actual reasons the applicant was declined. And one of the things that has come up when you're using AI to make decisions is how do you figure out what the reasons are? Because oftentimes it's a black box. I mean, that's inherent in some respect to AI. And the industry sought guidance from the CFPB on how to comply. And the CFPB said, guess what? You got to comply. And we're not going to tell you how. And that can be very frustrating for the industry because it suggests that the CFPB, which touches upon and has knowledge of so many different lenders and their practices and how they do it, and also has technical people who understand AI, you want to look to your regulator to provide specific guidance rather than just general guidance. And to your point, Danny, I think we're caught in a web of very general guidance that makes it very impracticable for institutions to comply.
So, Austin, does that mean regulation by enforcement? Is that ultimately what we should expect?
Well, sure, of course. That's been the MO of the CFPB since it was founded, except I will say during the last administration, you mentioned sandbox, Isabelle. I mean, the last presidential administration, the head of the CFPB, Kathy Kraninger, was very interested in sandbox. And sandbox was a core part of the way she ran the CFPB, was to explore what's happening from a technology perspective in the industry and to provide very specific guidance about whether it's acceptable or not or how to improve it. Current administration got rid of that very quickly, the sandbox approach, but it's possible that we will revert back to a sandbox approach with the CFPB. Who knows? To be seen. But I do think there's a lot of value in the sandbox approach to regulation. The next thing I wanted to cover is what we see in terms of litigation on this front. We've talked a lot about the regulatory work and potential enforcement, but what about litigation? Isabelle, is that something you're able to speak to, at least initially?
Yes, I think AI-related litigation is very much an emerging risk because we're still so early days. Some of the things that we have seen so far have been more in the area of intellectual property around where the data sets come from and the right to use that data. I don't think that's ultimately where this ends up. There are fascinating issues about privacy and fascinating issues about how the technology is being used. Does this ultimately become a product liability question? Does it become an issue of traditional breach of contract? And then, of course, on the flip side, there'll always be class action risk and consumer class action risk in ways that I think we have not perhaps fully internalized and understood because we're still figuring out how the technology is going to be used, particularly in the financial services space. And the regulators have not yet provided enough guidance for people to finalize those ideas. But I do believe that there will be a massive amount of litigation that touches on AI in one way or another, including litigation that will come out of one-off or unanticipated events that have an AI role.
Yeah, we're already working on AI litigations that I think are at the cutting edge of where this is all going. And I completely agree with Isabelle. The IP issues are fascinating, and that represents wave one. But what's really coming is the accuracy claims. And you start with the hallucination litigation, which we're working on. But even beyond that, just what is the industry standard for good enough? What are you comparing it to? None of that is really fully understood yet. And I think that's going to lead to a lot of litigation unless regulators step in and say, this is what the standard ought to be. So I think Isabelle's exactly right. Even in the class action space where we've seen unfair discrimination class action cases against algorithms and algorithmic decision making, we're now starting to see, for example, in the health insurance example, cases that are focused more on the inaccuracy rather than any particular unlawful discrimination or the displacement of human decision making with automated decision making where people allege that's not appropriate or allowed. So I think we are going to see a wave of second line litigation as companies implement these tools into specific sectors like financial services.
Floris, any thought on that from a European perspective?
Yeah, I think in general, the litigation risk and litigation landscape in the EU looks a bit different than in the US. We aren't as far as you guys are in terms of the litigations mentioned, where I expect most of the regulatory focus will be around bias and around explainability. Why was a certain decision made? I think regulators will find that very important.
In addition to the consumer-facing aspect of all this, where I think a lot of the use cases are, we shouldn't forget about the traditional ways that internally financial services providers and others are using algorithms, even traditional old-fashioned algorithms, for prediction and predictive modeling. And the regulators have had a lot to say about that too, including the SEC talking about predictive analytics and the need to make sure that there aren't conflicts of interest when someone is using a predictive algorithm, making sure that it is in the best interest of the consumers that particular professional is assisting, and that there aren't conflicts or cross motivations that might affect the use of the algorithm. So that's another area to look for on some of the more internal uses of these tools.
And one more area to flag in the SEC space, there's such a thing now as AI washing. You shouldn't be telling people that you're using AI or that your technology has capabilities that it doesn't. The SEC has already waded into that space. So I think that's one to watch too.
That is such an important point. And to build on that, one tension we're seeing a lot when we're helping clients build their internal risk management systems is there can often be a disconnect between what the marketing department is calling AI to the public and what the internal governance function wants to define as AI for risk management. And to put a finer point on it, marketers tend to want to call everything AI because it's new and exciting. But when you have to govern internally, it's really hard if you call everything AI. So there is a natural tendency to say, let's take a very statutory based view of what is or is not artificial intelligence, and making sure that those two voices are aligned, I think is going to be really important given the types of things Isabelle just raised.
Well, this has been great. Danny, Floris, Isabelle, thank you very much. I think we've learned a lot about the intersection of AI and compliance and financial services, and obviously a lot more to come. So thank you guys very much.
Thank you for listening to DLA Piper's Beyond the Curve podcast. All information, content, and materials contained in this podcast are for general informational purposes only. This podcast is intended to be a general overview of the subjects discussed and does not create a lawyer-client relationship. Statements and opinions are those of the individual speakers and participants, and do not necessarily reflect the policies or opinions of DLA Piper LLP US. The information contained in this podcast is not and should not be used as a substitute for legal advice. No listener should act or refrain from acting with respect to any particular legal matter on the basis of this podcast without first seeking legal advice from counsel in the relevant jurisdiction. This podcast may qualify as lawyer advertising, requiring notice in some jurisdictions. Prior results do not guarantee a similar outcome. DLA Piper LLP US accepts no responsibility for any actions taken or not taken as a result of this podcast.